Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 28th, 2025, and we are taking a close look at Intel Corporation, ticker symbol Intel. There's been a lot of news and some very interesting price action recently, so let's break it all down. First, let's cover the news driving the sentiment around Intel. We've seen some very bullish commentary, with Benzinga reporting that the stock surged recently on hopes of a Federal Reserve rate cut in December. Lower interest rates would be a significant tailwind for Intel's capital-heavy IDM 2.0 strategy, making it cheaper to finance their new fabrication plants. This macro-level optimism is a powerful force for the stock right now. However, the picture isn't entirely clear. MarketBeat highlights mixed signals, noting positive operational momentum, but also pointing to a legal dispute with TSMC as a material overhang, creating uncertainty. This comes after a period of extreme bullishness, with a Seeking Alpha article from November 19 titled "Intel Stock Could Explode," following their strong Q3 earnings report on October 23. Conversely, just a day before that, on November 18, there were broad concerns about an AI bubble causing a sell-off across the chip sector, including Intel. So we have a mix of company-specific good news, potential macro tailwinds, and sector-wide fears all influencing the price. Now, let's see how this news translates to the daily chart for a long-term perspective. Looking at the past year, INTC's story is one of dramatic turnaround. The stock established a significant bottom and its 52-week low way down at $17.665 back in early April of this year. After months of grinding sideways and slowly building a base, the stock truly came to life in late September. We can see an absolutely explosive move with massive volume, taking the price from around $25 to a 52-week high of $42.48 in late October. That high was printed right after their strong earnings report, suggesting a classic, by the rumor, sell the news reaction as traders took profits. Since that peak, the stock has been in a corrective phase, pulling back and consolidating those enormous gains. Let's zoom in on the action since that major breakout in September. The rally began in earnest around September 18th, with a huge gap up from the $25 level that kicked off a month-long surge. Notice the massive increase in volume during this period, indicating strong institutional buying pressure. The earnings report on October 23 led to another gap up, pushing the stock from a close of $38.16 to an open over $40 the next day, which ultimately marked the peak of the move. The pullback from the $42.48 high has been orderly so far, finding initial support just above $39 before falling further in mid-November. This drop from about $38 down to the $33 to $34 range aligns perfectly with the news reports about fears of an AI bubble hitting the semiconductor sector. In the last week, we've seen a bounce off that $33 to $34 area, which correlates with the positive news surrounding a potential Fed rate cut. This $33 to $34 zone has now become a critical support level to watch. Switching to the 1-hour chart gives us a clearer view of this recent price action. Here we can clearly see the downtrend that started in mid-November, taking the price from above $38 down to a low near $33. The price has since bounced and is now building a potential base. Immediate overhead resistance is visible at the recent swing high around $37.24. A convincing break and hold above this level would be a very bullish short-term signal. On the downside, the key support area is between $34.50 and the recent low around $33. As long as the price remains above this zone, the short-term bullish case remains intact. Drilling down to the 15-minute chart, we can analyze the character of the most recent trading sessions. Looking at the price action from the last full session on November 26th, we can see a strong and steady climb throughout the day. The stock opened around $36.20 and closed near the session high at $36.81. This shows that buyers were in control right into the close, which is a sign of short-term strength and momentum carrying into the next session. So, to recap everything, let's go back to the daily chart and outline the key levels and potential scenarios. Your major, long-term resistance is the 52-week high at $42.48. Your most critical support level to watch right now is the recent consolidation zone between $33 and $34. Intermediate resistance sits around the $38 mark, a level that has acted as both support and resistance previously. For a bullish scenario, we need to see Intel hold above the $34 support area and break through the immediate resistance around $37.50. If that happens, a move to retest $40 and then the highs at $42.48 becomes highly probable. The likelihood of this scenario is reinforced by positive macro news, like a confirmed Fed rate cut, and I'd place its probability at around 60%. For a bearish scenario, a failure to hold the $34 support would be a major warning sign. A break below this level would open the door for a drop to the low $30s and potentially even a test of the large gap from late September, down around the $28 to $29 area. This could be triggered by broader market weakness or negative news regarding their legal battles. I would place the probability of this scenario at around 40%. The main thing to watch for is the upcoming Fed meeting in December. Their decision on interest rates will likely be a major catalyst for Intel and the market as a whole. And finally, a short disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts.